Mortgage rates are rising. Inflation is the highest it's been in over 40 years. The probability of a recession is becoming more and more evident. So, who in their right mind would want to purchase real estate in this current market? Thank you for coming back to view our market update video. As always, we'll begin by sharing some interesting statistics with you, discuss who's purchasing in this market, how affordability is working with the rising interest rates, and ultimately, I will share with you one of my biggest regrets as a realtor. Let's begin with my favorite metric of all, which is months of inventory. MOI for the Real Estate Board of Greater Vancouver in June sat at just under 4.5 months. A friendly reminder that anything from 2 to 4 months of inventory is considered a seller's market. Anything between 4 and 6 months of inventory is considered a balanced market, and anything above 6 months is considered a seller's market. At the peak of the 2022 market, MOI sat at just under 2 months. If you're in the detached market with the buying power to do so, the west side of Vancouver has a great combination of high levels of months of inventory and a steep decline in average sales price from the peak of the market earlier this year. In last month's video, I spoke about how buyers looking to trade up can take advantage of current market conditions. So if you're a buyer who's considering moving up from a townhouse to a detached property, you might want to make note of the following areas. In these following areas, the months of inventory for the detached is well above 6, with the months of inventory for the attached or townhome properties is at 2 or lower. In last month's market video, I explained how purchasers that are trading up can take advantage of the current market condition. So if you're a buyer who's looking to trade up from a townhouse to a detached property, you might want to make note of the following areas, since the townhome months of inventory sits at 2 or less, while the detached properties have over 6 months of inventory. Ladner, East Burnaby, Port Moody, New Westminster, and West Vancouver will all give you an opportunity to move from a seller's market into a buyer's market. Now, what a great segue into who's currently purchasing real estate. Well, simply put, real estate sellers. Let's not forget that for a vast majority of the time, those that do sell their properties turn around and become purchasers because, of course, they need somewhere to move to. So you have a lot of folks in the areas that I mentioned and beyond that are taking advantage of the trade-up opportunities. In this past week alone, our team received 3 inquiries from our clients that are looking to take advantage of the softer markets out there. To learn more on who is purchasing real estate right now and why, you might want to take a listen to our Get to the Point audio, which is titled "Your Home is Not an Investment." You can find it on our website under our June 2022 market update blog. There I speak to why trying to time the market is really an investor's mindset and not necessarily appropriate for owner-occupiers. Okay, let's take a quick 2 minutes and have a look at how the rising rates are affecting affordability and the wait-and-see strategy some homebuyers are currently taking in the market. Now, before your eyes glaze over because you're looking at a spreadsheet, bear with me, stick with me here for 2 minutes as this is quite important. Let's go to a scenario whereby you make $1 million purchase with 20% down payment. At the peak of the market, February, March of 2022, this $1 million purchase at the 5-year fixed rate at that time would equate to just under $3,700 a month in mortgage payments. Now, let's fast forward to today. That same property is worth $900,000. The Real Estate Board of Greater Vancouver is reporting a 10% drop in average sales prices. And once you take this $900,000 purchase at today's 5-year fixed rate, down here, you're actually having a monthly payment that is higher at just over $4,200 a month. Of course, this probably isn't a surprise to most of you out there. But stay with me. I'm getting to the point here, which is for you to see a monthly payment that was similar to the peak of the market with the lower rates. You're looking for prices to drop somewhere between 20 to 25% for your monthly payment to equal the same. And if you're thinking about getting any kind of meaningful savings, which would actually then equate to an increase in affordability in your monthly payments, you're looking at a minimum of a 30% decline of that same $1 million property from the peak of the market. Now, listen, yes, that 30% or more drop in prices may take place, but what would that look like? That would mean that today's $900,000 property that we've been discussing in this scenario will drop to $700,000 or more. And how long are you waiting for that possibly to happen? Will the home you want be available at that time? More importantly, further increases to rates will most likely be one of the causes for further declines in prices. So, will you even be able to qualify for a mortgage at the higher rates? Point being, is your goal to purchase a home when you have a wider array of selection, you have some time to perform your due diligence, and some negotiating power in the price and the terms? Or are you simply trying to thread that needle and time the market perfectly? Well, as we mentioned in our Get to the Point audio, we don't recommend our clients base their home purchasing strategy on a gamble. Moving on, how can I speak so confidently with such conviction about purchasing real estate in a declining market? No, it's not because I'm a realtor and I'm pushing a narrative to bolster more commissions. And no, it's not because some of the best real estate purchases I've made in my career have been during a declining market. You see, it's not purchasing a once in a lifetime pre sale assignment opportunity that has been etched into my memory this entire time. Looking back, it was 2008. The financial crisis was in full swing. I was 2 years into the business, and panic was running rampant amongst real estate buyers, sellers, and the economy as a whole. So it's at this time I was presented an opportunity to take over a contract of a pre-sale concrete downtown condominium at its original contract price. For those of you who are familiar with how assignments work, there was zero lift, meaning no profit to the person selling me the contract. And as a bonus, all they wanted was a 5% deposit from me. They were willing to carry the contract until completion with the developer with their 15% of deposit in place. They only requested 5% from me. Again, for those of you who know anything about real estate and pre-sale purchases, you know that's a pretty sweetheart of a deal. So what happened? Well, in my infinite wisdom, I decided to decline the offer. And I wake up a short 2 years later to find that same property up 40% in value. Ouch. Now, you could argue that I could have never known values would bounce back that quickly. And you're right. And yes, it did get a lot worse before it did get better. So my approach at that time would have been the right decision had I been an investor, which I was not. You see, I was lucky enough to have sold my townhouse in Richmond at the peak of the 2008 market. So I needed somewhere to live anyway. I could have qualified for the mortgage. I definitely could afford the payments. I would have secured a 2009 purchase for its 2006 price. And I needed somewhere to live regardless of market conditions. But I lost sight of all of this because I decided that I would wait out the market and wait for prices to bottom out. Now, here I am, 14 years later, still crying into my coffee about the decision that I didn't make when I had all the leverage in the world. Although one of my biggest regrets to this day as a realtor, it's lessons like this that I've experienced over my 16-year professional career that allows me to be able to speak with some confidence when I'm talking to my own clients. So if you're having troubles navigating through today's complex real estate market, chances are we have some experiences that we could share with you that will probably help. Simply book yourself in for a virtual or in-person coffee using the link below. We are here to help. don't worry, no purchase is necessary. I hope you have found this month's video helpful. And if you liked what you just saw, we would really appreciate you subscribing to our future videos by simply clicking the subscribe button below our video on YouTube.